Bryce, welcome to Zebec's Future Money interview series, where we interview thought leaders in the crypto, blockchain, and payment space. Bryce is the co-founder and CEO of Turnkey, which is a wallet infrastructure startup. Bryce, great to have you on.
Awesome to be here.
Yeah, we'd love to hear a little more about yourself and what it is you exactly do at Turnkey.
Awesome. As you mentioned, I'm the co-founder and CEO of Turnkey, which is a low-level wallet infrastructure company. That's a lot of buzzwords, and you might be asking, what exactly is wallet infrastructure? Everything in crypto starts with a wallet to hold crypto or sign transactions. And we make it really easy for businesses to either integrate wallets into their applications so they can onboard consumers really easily, or even for businesses that need wallets as part of their operations. They're signing transactions at massive scale for different payments flows or other types of crypto operations. To give a little background on myself, I got my start in crypto at Coinbase, was working on Coinbase custody. And it's actually where I met my co-founder, Jack. Jack and I really built Coinbase custody from the ground up. It's now the largest institutional crypto custodian in the world, holds over $100 billion of crypto assets. And it was a really wild ride as we scaled that business. Got to wear a lot of different hats along the way. And then after that, I went to a neo broker out of Berlin called Trade Republic. You can kind of think of it like Robinhood for Europe. There, I was leading the crypto team and launched the crypto trading product for Trade Republic. And it was a great experience because I got to go from building crypto infrastructure at Coinbase to using crypto infrastructure at Trade Republic, and saw the industry from a lot of different angles and just saw a hole in it, which led me to creating Turnkey. Maybe to round this out quickly, we now work with a whole bunch of different folks across the crypto industry, everyone from Alchemy, who has built a wallet as a service on top of us, to Infinex, which is a trading terminal that has been launched by the team behind Synthetics, to even Mural, which is a B2B payments company for easy cross-border payments and invoicing. So lots of cool use cases that we can dig into today. And again, very excited to be here.
Yeah, awesome. And before we get into the questions, we also noticed that Turnkey recently raised their Series A for $15 million from Galaxy. So just want to say congrats on that.
Thank you so much. Yeah, it was co-led by Galaxy and Faction. Has been really great to get that over the line. And we've really just been able to pour some gas on growth over the last few months.
Yeah, that's awesome. All right, so then let's get into the questions. So a few of the key trends we've seen in the blockchain and crypto space has been stablecoins, especially when it comes to the number of transactions and the volumes. They've just completely skyrocketed since this last run. So in your opinion, based off your experience at Turnkey, what is the reason and why do you think stablecoins are so in demand?
We're really seeing it from two angles. I think angle number one is hyperinflation and kind of weaker fiat currencies are leading people to want to have digital dollars so they can protect the value of their money. Across the world, a lot of countries are moving into stablecoins really rapidly because it's just the easiest way to hold USD. I think the other side of this, though, is the traditional financial system is just really crappy infrastructure. It was pretty shocking to me going from Coinbase, which was a crypto native company, to Trade Republic, which was dealing with traditional securities trading, and realizing how challenging some of these money flows were behind the scenes. If certain things went wrong in settling a trade, for example, it could take upwards of 7+ days to settle a single trade, and getting the money into the right accounts took forever. I think stablecoins fix that, where you're able to have instant settlement across borders. Everybody's working off of the same rails, and it just allows for a much cheaper experience and more streamlined experience. So those are really the two trends that we're seeing, both the flight from weaker currencies as well as improvement on broader infrastructure behind the scenes.
I completely agree. So your first point around the volatility, I think we're seeing that stablecoins have been the go-to hedge against volatility, especially in unstable regions like South America, where they've even grown to adopt crypto as their native currencies, which allows them to just minimize losses and without having to convert back to fiat currencies. And then your second point about cross-border payments, that's something we've been focusing on for the past several months. We've noticed that the Web2 solutions for cross-border payments, for example, you go to Western Union, you want to send $200 back from the US to, say, Argentina, you're faced with a 12% fee just to send $200. So the amount you get to actually send over is around 175, give or take, which is not very effective for lower income employees or workers in the US. It's slower. It requires a pickup fee as well for the recipients. The Web2 solutions just have not been innovating and growing at a fast enough rate compared to what Web3 has done in terms of cross-border payments. So completely agree with you on that. Stablecoins do facilitate cheaper, faster, and more accessible transactions compared to the traditional banking systems. Aside from the demand, what's like the real world impact we're seeing that stablecoins have? What are some other real world use cases aside from cross-border payments that you've seen stablecoins being able to solve and push forward?
I think it's also this ability to democratize broader financial services that we're really used to in the Western world. Folks are more easily able to have debit cards powered by stablecoins behind the scenes. They're more easily able to get access to yield generating assets and have a savings account type product. It's interesting because a lot of people in the US, they see crypto and they're like, oh, the financial system works pretty well. I don't understand why we need to transform it. And then you see how folks have to deal with really challenging financial services in other countries. And you realize, oh, okay, if we're able to democratize this at scale using more decentralized infrastructure, that's just going to be a huge unlock for the broader world.
No, completely agree. I think financial inclusion has been at the forefront for a lot of these stablecoins' mission, at least. They offer better alternative to traditional banking, as we already talked about, and it's more secure. And I think one of the main countries we've used as a case study has been Venezuela, where stablecoins have been used to protect against hyperinflation, and you can use them for everyday transactions. And we're seeing that more in Africa as well with BitPesa, which allows people in Africa to use crypto and stablecoins to facilitate payments, given that their traditional banking system is quite underdeveloped.
Yeah, I couldn't agree more. I think that those are the areas that we're definitely seeing the most interest in moving towards stablecoins. It feels like they're going to be leading the industry in many ways on these more kind of comprehensive stablecoin banking solutions.
Yeah, completely agree. On the same topic of innovation in the payment sector and how blockchain technology has pushed payments innovation forward, how has the adoption of blockchain technology evolved over the past few years in the payment sector? What do you think is going to be the next step for the payments industry relative to the blockchain technology?
It's a really good question. I think that we had a lot of experimentation over the past 7, 8 years in crypto of what methodologies make sense for minting and burning stable coins. We had algorithmic stable coins and asset backed stable coins. And I think the industry has stabilized more or less on a fiat backed stablecoin like a USDC or a USDT, which has just led to a lot more stability in how people are viewing stablecoins. I think the other piece that has been really exciting is we've moved to a world with near zero transaction fees. It didn't really make sense to be doing high throughput stablecoin transactions when your transaction fee could be $5, $10, $20 just to send crypto from one address to another on Ethereum. Now, with the advent of L2s, we're seeing payments just make a lot more sense. And at scale, those small basis points of difference are really huge. And so I think that this move towards stability and trust in the underlying stablecoins themselves, plus scalability and low transaction fees, has led to just an explosion of interest in stablecoins because it just makes more sense when you have all of those puzzle pieces in place.
No, that's a great point. And you mentioned L2s. That was actually going to lead into my next question about what do you think are some of the most promising technological innovations that are transforming usability in crypto? And I would say layer two solutions are one of them, especially since you have technologies like Lightning Network for Bitcoin, increasing transaction throughput and reducing fees, and it just makes it more practical for everyday use. So what are some other promising technological innovations that you think will transform usability in crypto?
Yeah, I think we're getting to a point where a lot of the scalability and throughput of a given crypto network, those are solved problems. There are going to be improvements to those over time, but a lot of what needs to happen now is how do consumers actually interact with the blockchain? And this is what we think about at Turnkey all day long. What are the different authentication methods that users can use to authenticate to a non-custodial wallet? How do we make sure that those non-custodial wallets are incredibly secure while remaining usable? How do we make sure that they're high performance and scalable? And then I think importantly, tied with this L2 narrative is the fact that now people have their crypto spread across 20 different L2s and chains and so forth. And so there's a lot of conversation around how do you abstract that multi-chain world? How do you make sure that users don't have to worry about where their crypto is, which network it's on, and they're able to just interact with the application like a normal Web2 app? You can think of it right now, we are asking users to understand if their app is on AWS or Azure or GCP. That's what it's like to ask people to switch between Base and Arbitrum and all these other L2s in order to figure out exactly how they're going to interact with a crypto app. And that just doesn't make sense at scale. So we need to abstract all of that away.
Understood. Okay. So then I guess continuing on Turnkey's focus, why does wallet infrastructure matter? Why does all this data matter in the grand scheme of things?
So you can think of wallet infrastructure as the connective tissue between a person or a business and a crypto network. It's really important to have that secure, trusted layer that allows people to access a crypto network and to control their own funds within that network. I think the other piece is wallet infrastructure really dictates the types of consumer or B2B experiences that are able to be built. The types of products in the past with Coinbase custody and BitGo and Fireblocks and these other more traditional crypto custodians really were great for buy and hold institutions, but were not built for people who were building on the application layer and for people who were building consumer experiences. And so by having this lower level infrastructure at Turnkey, by focusing more on flexibility and scalability, we've unlocked a whole host of new use cases from beautiful consumer trading experiences like Infinex or Moonshot to B2B payments experiences with multi-user access to a wallet like Mural, and the list goes on. So I think what's exciting about wallet infrastructure is just how it unlocks new types of usability in the crypto space.
Yeah, that's awesome. That you actually answered my next question anyways about how Turkey is leveraging advancements in blockchain technology to enhance your core offerings. But I think that sort of answers it.
Maybe to jump on that as well, there are a lot of advancements on chain functionalities that folks are leaning into. So account abstraction is a really great example here. We have really easy integrations with ZeroDev and Alchemy and other account abstraction providers. And with that, we do see a lot of people moving towards account abstraction. I would say 90% plus of Turnkey clients are using account abstraction in some way because it again allows you to unlock better usability. So you can abstract away the gassing of a transaction, you can batch transactions, you can have easy session keys. All of these different functionalities are possible with account abstraction. And so we're definitely very bullish there and think that it's a great combination with Turnkey's underlying infrastructure.
Going off of this, what is, I guess, the near-term goal for Turnkey relative to everything you just mentioned?
I think a lot of it is around doubling down on our core product. So there are a couple things here. One is just continuing to unlock new primitives that allow people to build more interesting use cases. We are in the process of launching OAuth authentication, and we're going to be adding new authentication methods over the coming months. We are adding deeper support for different crypto networks to make that easier to use. We're expanding our policy engine, which allows you to set really detailed permissions around who can access a given private key. And so that's one piece of it. The second piece is just continuing to make it easier to use Turnkey. That's something that we're always really focused on. And then the last piece is we're an infrastructure company. So we need to focus on scalability and reliability and invest early in that because crypto grows fast and we don't want to be caught with our pants down there.
That's a good point. Yeah, thank you for that. We've mentioned a lot of the differences between Web 2 and Web 3 processes when it comes to payments and just general daily use cases. How do you see the relationship between traditional financial institutions and blockchain companies evolving? Do you think there's an intersection in the future, or do you think it's further division and a complete transition from Web 2 to Web 3?
It's really interesting because I definitely saw the early days of this evolving at Coinbase as institutions were onboarding to Coinbase custody and we were starting up the institutional business at Coinbase. I think there has always been this dialogue of the institutions are coming. It's going to be this dam breaking moment where everybody flows in, but institutions are slow and they take small steps at a time. New institutions might get in faster, and there is some sense of disruption in those industries. But I think we'll see more of a steady growth of institutional usage of crypto rather than something that happens overnight. With that as well, I do think these things intersect eventually. I think eventually it's going to be like how companies were calling themselves mobile companies, and now everybody has a mobile strategy, a mobile app of some sort. I think companies are calling themselves crypto companies right now, and eventually we're going to have this world where every financial company is a crypto company under the hood, and it's just the infrastructure that powers things behind the scenes.
That's a neat way of looking at it.
Yeah, I think it's interesting to watch. We're definitely seeing a lot of institutions more seriously explore all of the underlying blockchain stuff and take it more seriously.
Yeah, no, completely agree. So one of the key themes it seemed like you were mentioning when we were talking about Turnkey's focus was security. Given that you have a lot of focus on authentication and permissions, how do you see the regulatory environment impacting the growth and innovation of just the whole blockchain industry as well as payments?
I think we're getting a lot more regulatory clarity over time. It's also something that is a little bumpy at times and doesn't always work out in the ways that the crypto industry wishes it would. But you compare this to 5 years ago, and we're worlds ahead. We're having comprehensive regulatory frameworks get established in places like the EU with MiCA. I think this is just the process that a new industry goes through as that gets established. My gut is regulation over time is going to be a boon because it's going to allow financial institutions and Fortune 500 companies to actually enter into the space. There's a lot of people who are standing on the sidelines right now because of that lack of clarity. And so the sooner we can get that, the better.
I completely agree. I think just even having more regulation just shows more acceptance of blockchain and crypto, which I think would inspire more confidence in not just users, but institutions as well.
Totally.
So that's a great point. Okay, Bryce, don't want to keep you too long. So thank you again for joining our Future of Money interview series. It was great learning more about yourself as well as Turnkey. And a lot of the things we covered today have hopefully been helpful to listeners and whatever their prospective ideas and passions are.
Awesome. Yeah, thanks so much, Parth. It was great to get on here. If you guys are interested in learning more about Turnkey, feel free to follow us at Turnkey HQ on Twitter/X. And my email is bryce@turnkey.com if you'd like to talk about building on Turnkey.
Awesome. Thanks again, Bryce. Hope to have you on again in the future.
Awesome. Take care, Parth.